Good morning, everyone. It's a pleasure for me to welcome you today at the 18th Annual European Financial Services Conference, and specifically to open a panel on the Capital Markets Union and banking. Today, the Capital Markets Union is very much back in the play. The momentum is building up again. Member states increasingly refer to CMU as one of their priorities in their high-level speeches. There is common understanding that public support cannot get us entirely out of the COVID-induced crisis. Perhaps it can stop the bleeding by providing the so much needed short-term liquidity, but it cannot fix the problem entirely. Banks, incentivized by the states and European institutions, try to continue lending, but that does have a maturity date. It also has an interest that needs to be repaid. Hence, the discussion on the importance of re-equitization of balance sheets, of the need to tap into pools of long-term financing, and the fact that it gets increasingly traction. Hence, the regained importance of the Capital Markets Union project, building liquidity and integrating it, enhancing access of companies to a wider investor base, reducing the cost of equity, and more generally, the cost of cross-border investment. In short, all of the things that CMU is meant to achieve. And this is not even to mention the need for market-based financing to support the green and digital transition or protect Europe's sovereign interests in the post-Brexit world. My name is Tatyana Panova, and I'm heading the CMU unit in the European Commission, and today I will be moderating this panel. With this, I'm turning to today's prominent panelists. Dr. Danuta Maria Hubner, the Honourable Member of the European Parliament. Natasha Cazenave, the Managing Director of IMF, the French markets regulator. Kevin Wall, the CEO of Barclays Europe. Sheila Nicoll, Head of the Public Policy at Schroders, and, quite importantly, an ex-member of the Commission High-Level Forum on the Capital Markets. And last but not least, Verena Ross, the Executive Director of ESMA, the European Securities and Markets Authority. To kickstart the discussion, I would now ask each panelist to briefly present their views on the topic. Danuta, may I start with you?
The idea of getting us together on the Capital Markets Union, and I would like in my introductory remarks just to mention sort of additional or new environment in which we are living now in Europe and in the world, which I think is adding new arguments to the imperative of building fully fledged capital market union in Europe. And I would like to start with a sentence which probably we all share, also if we come from banking sector, and that because I also believe that our European experience with this long-term lack of good balance, adequate balance between bank and capital funding is undermining European global competitiveness. And I also think that today we have those geopolitical uncertainties which make also this challenge even more urgent. I'm thinking here of a big capital market actually leaving the European Union. But we all know that building a competitive, sustainable capital market takes time, and it will take time. But I think also that now is the moment when Europe should and can move forward, reshaping its entire financial infrastructure, because there will be massive, I think, diversified investment needs, and access to big and competitive funding and capital in particular is absolutely fundamental. Challenges we are facing now in Europe are, of course, well known, because we have inherited from pre-COVID times, this just commitment to build a climate-friendly European Union and also to build a technologically competitive European Union. I mean, mostly about digital, but not only. But with this recent addition of COVID and related crisis, and without well-functioning, robust, stable financial and capital banking and capital markets, or financial markets in general, EU will not be able to implement its recovery program. As you have noticed, for the time being, we have been strongly focusing on public finances, but the need to work hand in hand with private sector is more than obvious, because we all know that jobs come from private investment and good funding of private investment. So I think that European level, but also national level decision makers and market participants, we have to work together on it. And of course, not everything is urgent, but there are many important long-term issues which we have to think of and to take note and launch maybe today. And there is, I think, political will to build capital market that will fit these future needs. And if you look just to the last 3 months, as of March, actually, many decisions have been made leading to major increase in public debt, adjustments to rules facilitating the spending of the European budget. Also, state aid rules have been temporarily relaxed, as well as the rules for fiscal discipline. But what is important is also that we are about to launch, hopefully, revolutionary changes to the long-term European budget, and which is under discussion. But also, the challenge here is whether the markets will respond to the novelty, which is collective EU borrowing. And I count very much that at least pension funds will move forward on it. But I think also that, unfortunately, probably from this Commission borrowing at such a scale, to save assets is a long way to go. But definitely, while focusing on the public so far, we have to make it really work when it comes to the market based funding. And we have done, in the Parliament at least, we have done some quick fixes in existing legislation to facilitate liquidity flows. But the real challenge is to move forward with the capital market. And of course, I would like to finish maybe with one issue, which is this big elephant in the room, which is Brexit, but also other geopolitical challenges. I think we have to minimize absolutely the disruptions related to Brexit. We have to continue talking to US supervisors and regulators, which Commission is doing. We have to try also to reduce damaging elements in the global environment. I think here of China. But I think even with this better, less protectionist world around, which will be a better place to invest also in the future, it will not replace our need to have strong European domestic markets, stronger banks, stronger capital markets, internationally important euro, and all that based as much as we can on a long-term cooperative approach with UK. I would like to underline it because I think we should, when preparing for competition, we should also do everything to have this cooperative long-term strategic approach with UK, but also US, because I think doing otherwise it would be short-sighted. And it is a challenge for the financial sector. It will be a challenge for capital markets. There might be no equivalence world, so let's hope not. There will be no passporting-based world in the future. We must take it very clearly into account. But I would leave this world, this detailed discussion on those issues further to the question and to the comments. So I would like to finish on this my introductory remarks. Thank you.
Thank you very much, Danuta. You've actually set out the scene fairly well, and the list of reasons, let's put it this way, for the establishment or deepening of the Capital Markets Union in Europe, in particular at this point in time, is extremely long. Natasha, would you agree with Danuta's appreciation of the current situation and the fact that CMU is more urgent than ever?
Good morning, everyone. No, absolutely. I completely agree. And thank you for setting the scene so nicely. Absolutely. The high-level forum says that now more than ever, the Capital Markets Union project is needed. We couldn't agree more. It's a critical project for the EU, particularly now when we are undergoing such a crisis of such historical magnitude. European firms are going to need refinancing in massive amounts. They have been benefiting from bank debt, they have been benefiting from public support, but they will be going forward needing support from financial markets, and particularly in the equity space. And therefore, yes, now more than ever, we need to consider this project. We need to deepen our European capital markets. We need to make sure that they can serve the needs of European savers and European corporates. That being said, in the past, we've had many discussions about the lack of political support, political momentum, and I think, as Ms. Hubner just said, it's obvious there is now very clear, very strong political support for this project. This is very welcome. We've seen many initiatives come out, including from the French and German governments, with the Netherlands as well, the next CMU initiative, publications from the European Council, the European Parliament, and very strong statements from the Commission with Vice President Dombrovskis. And all this is laying out sort of a roadmap for what needs to be done. What needs to be done, I think, is relatively clear. There have been very numerous proposals from trade associations, consumer representatives, policymakers. There's been a tremendous amount of work that has been done to identify what are the avenues we need to explore to actually meet that objective and that challenge of deepening our European markets. So it's all out there. The question is, how do we do it? If I may, in my introductory remarks, I just wanted to react to the most recent, the climax of all this work, which is the high-level forum report published 2 weeks ago. And I just wanted to maybe mention briefly what we are very happy to see and that we strongly support, and maybe what we would have liked to see in the report, and that we hope that the Commission will pick up in its action plan. So maybe first I see what we support. We support the approach. It's interesting to have such a pragmatic approach. Interesting to see that they've really tried to identify what are those areas where changes would make a difference and actually bring us one step further for the next phase of the CMU. And we very much support the proposals, for example, to develop a European single access point to make sure investors can have access to information on all European firms listed on regulated markets. We think that's a positive proposal, very ambitious. We also support the idea of introducing more proportionality for our SMEs and facilitating their access to financial markets. And we are also very supportive of the proposal to mobilize retail investor savings and propose long-term investments so we can have these deep pools of liquidity on the ground in the EU. And lastly, as a regulator, I need to mention also one point that is dear to us, which is the proposal to have some kind of a legislative mechanism to be more agile and reactive to situations. We've seen in the crisis how quickly we need to react, how much we need to be able to adjust our frameworks. And sometimes in the EU, it can be a little bit rigid, and very often rightly so, because we have an institutional framework that requires that for the democratic process. So we welcome the proposal for a form of no action letter that we need to work on the details of how to make it fit in our legislative process. I would just caution against a few proposals. We, of course, cannot agree with the proposal to have a 5-year transition period after an IPO, where we would allow firms not to be submitted to requirements on market abuse or transparency. We don't think that that's a positive proposal. In the same way, we don't support the proposal for removing the free float requirements for IPOs. We think that would also lead to very problematic situations in the market. But all in all, very supportive. Now, what would we see as being missing or not having been directly involved in the forum? We have this sort of outside look to this project. I think if we look at the report in its entirety, it's all there. It really puts together all the very good proposals that all the different groups have been working on over these years that are out there. But sometimes some very key structuring points have not been translated into concrete proposals. And I'll mention a few. For example, consolidated tape is not there. We hope that the Commission will consider that as it reviews its MiFID II regime. But more importantly, looking ahead, we think that for the CMU to be a success, this new effort we're trying, and there is a consensus that we really deeply need now to get this to the next phase, we think the CMU project needs to be directly plugged into the other strategic priorities of the EU. So the sustainable finance agenda, and more generally, how do we transform our economies towards a more sustainable model? And also, how do we raise to the challenge of digital transformations and innovation? And the CMU, to be a success, needs to be directly linked. So we trust the Commission to make sure that is done. I'd like to pick up also on one point that Ms. Hubner pointed out very clearly, and that is also in the report, but not translated in concrete terms. And I think it's because it's not that obvious and there is no direct measure. But it's the idea of highlighting that we need in the EU to take into account the impact of new measures, of proposals on the competitiveness of the EU market and what impact it has for our citizens, firms, and investors. And I think that is something that needs to be thought through a little bit more. There are interesting proposals out there. It should be taken into account when we do new measures, but of course, as one element in our thinking, so we know what is the impact of the measure on the competitiveness of the EU, but at the same time, it should not affect, of course, either market integrity, or financial stability objectives, but it has to be taken into account a bit more than it has been so far. And lastly, I will just comment from a regulator's perspective, we're very keen on making sure we have flexible, agile, readable, stable frameworks that we can implement. We have added quite a lot of complexity over the years, very often rightly so. We needed to tighten up regulation, but now we are mindful of the tension between our desire collectively to improve and do more CMU, and at the same time, how do we make sure that it remains not too complex? So we will also have to deal with that, and we very much support Ursula von der Leyen's proposal for one in, one out, to make sure that we collectively also make sure the framework remains workable. Again, to close on my introductory remarks, just to reiterate that in the context of this crisis where our firms are badly going to be in need of financing and going to be in need of raising capital, we need to make sure that we can provide the framework for that. So more than ever, absolutely, Tanya, Capital Markets Union is a key priority.
Thank you very much, Natasha. So we seem to be moving from whether or not it is important into a discussion, how do we actually get there? So Kevin, building on what the regulators and politicians have told us just a few minutes ago, they do appear to be absolutely aligned that it's essential for us to get this thing going, to build the integrated market for capital for Europe. And they already have their own ideas as to what should be the elements of that new program that needs to be implemented. So what would be your perspective, your perspective as a bank in that context? Because of course, banks have a bit of a double hat in Europe. You're part of market-based financing, but you're also part of the traditional retail banking. And therefore, in a way, sometimes you can see certain, if not conflicts, but certain interactions between the two. So how do you see really CMU in that context, so in today's context? And what do you think, the regulators, the legislators need to take into account when working on new measures to facilitate an integrated market for capital in Europe?
Okay, thanks, Tanya. Hopefully you can all hear me clearly and loudly. Look, I think the first thing to say is that, so I'm CEO of Barclays Europe, which is the Barclays Group subsidiary for all of our European businesses. We're Brexit ready. We cover a range of banking activities across Europe. We're in 10 different countries, credit cards and payments, private banking, investment banking, capital markets, and of course, lending largely to corporates. I think, we would just want to reiterate our overarching support for CMU. We've been big supporters from its sort of outset some years ago. Been a bit frustrated, I think, with many participants in terms of the somewhat stuttering progress. I'm sort of tempted to, well, I'm not tempted, I'm going to quote from Shakespeare, Julius Caesar, there is a tide in the affairs of men which taken at the flood leads on to fortune. And I hope that's sort of the stage that we're at in terms of CMU. I mean, I think it's very encouraging to hear, you know, a politician in Danuta, a regulator in Natasha. We heard yesterday from the executive vice president of the commission. We heard obviously earlier from Dr. Cookies from the German Ministry of Finance, and you know, sort of the stars are aligned in terms of, I think, you know, broad agreement as to the critical impetus needed to push CMU, you know, much more further down the track now. I think, you know, the current environment, financial, political, economic, clearly with the backdrop of COVID, makes it just, you know, even more critical that we you know, we get sort of wins on the board quite quickly. The HLF, the High Level Forum paper, we think is excellent. A number of people have remarked on the fact that it goes into detail. There are concrete recommendations. There may be one or two areas that sort of didn't get tackled, albeit they were clearly discussed. You know, the issue of centralized supervision, which is a critical issue. But we absolutely applaud the HLF and, as I say, its recommendations. And the challenge now, I think, for all of us is to you know, put things into practice. There's no question that you know, we do need to address the capital markets bank lending balance across Europe. As many people will be aware, if you look to the United States, it's about, based on which measures you use, about 75% capital markets source for companies borrowing money or generating funding, and about 25% bank lending. In Europe, sort of by and large, it's reversed, and that's not a sort of a healthy balance for Europe. We do need to re-equitize. That term's been used on a couple of occasions already. We shouldn't forget that the capital markets across Europe have done an excellent job over the last few months. It's been mainly the bond markets, but there have been, you know, hundreds of billions of euros raised. You know, we, along with other investment banks, have played a big part in that. But it's fair to say that you know, quite a lot of the sort of infrastructure attached to that is in London and New York. So you know, Europe clearly we need to develop our own infrastructure, our own resources. A fair bit of it's in place, but you know, the capital markets have been performing a very important role, both for national governments, for super sovereigns and agencies, as well as for many corporates across Europe in the last few months. Last couple of comments from me. We do think that, you know, European Capital Markets Union, it needs to be open, it needs to be international. I absolutely echo the comments that Danuta was making about, you know, linkages to London and New York and indeed Asia. That's critical. And we shouldn't forget, because this does sometimes get forgotten amidst all the acronyms and the technicalities of CMU, that at the end of the day, you know, CMU will deliver across Europe to European citizens, to countries, as well as pan-European institutions, to pension funds, to pensioners, you know, more liquidity, more access to funds, cheaper funding, a better equity debt balance. And you know, that just needs to be reiterated. I think it sometimes gets lost in the technicality. So look, we are huge you know, proponents of CMU. We're very encouraged by comments very recently, including at this conference, and by the HLF paper. Thank you.
Thank you very much, Tatyana. So I see indeed the stars are aligned with politicians, regulators, and the industry behind the ambitious CMU program. Sheila, as one of the insiders to the high-level forum, so you had the pleasure of working really, really actively on shaping the recommendations that are many, and as Kevin said, very granular, detailed, for the last 7 months. Do you agree that the stars are really aligned? And would you agree with a meant that now is really the moment, let's say, to push for a really big reform that would bring us there. As they say, never let a good crisis unused. What would be your view on this?
Yes, I mean, I found it very interesting that at the beginning, the impetus for the high-level forum was very much Brexit. But in the latter part of the discussion, I think for the last 2 or 3 months, the word Brexit was hardly mentioned. And the COVID-19, I think, then became the impetus for a lot of the work. As you say, precisely that. Let's not waste a good crisis. And I thought it might be helpful if in my introductory remarks, I just talked a bit about the dynamic of the group and why the report is as it is. Very pleased to hear Dr. Cookies and indeed Natasha comment on the sort of practicality and pragmatism. Some might say that some of the proposals are very, very technical, which some of them are. But we were very much building on work that had been done previously, especially the next CMU report, as Natasha and Dr. Cookies mentioned. That's exactly what we set out to do. I think maybe when we started, we thought we might come up with about 5 or 6 recommendations. I don't think we thought we'd come up with 17. And actually, even within those 17, there are lots of sub-recommendations. But I think that does actually reflect the richness of the expertise that's within the group. And I think there were also a lot of issues that got discussed that didn't actually make it into the report. I mean, just picking up on Natasha's points about linking up with other activities, 1 or 2 commentators have said that they were quite surprised that there wasn't more about sustainability and about green financing in the paper. It wasn't that was not talked about. It was very much that we knew that there were so many other activities elsewhere. And we didn't think it would necessarily add a great deal more to the discussion if we came up with 6 more initiatives in that area. But there were certainly, we were very conscious that there were links with the digital program, links with the green and sustainability program, and would very much echo Natasha's points about joining up dots on this one. I have to say that and there were quite a lot of subjects that didn't actually make it into the report. As Natasha has also rightly said, the consolidated take point was very extensively discussed, but was not something on which we could reach sufficient agreement. But I think that is probably something that the Commission will be taking forward anyway. It was very interesting. There were moments in the debate when I wondered whether we were ever going to reach any agreement. I should have known better. I've worked in Europe for many, many years. I should have known better that everything came together at the last minute. I think that was partly the spirit of the members of the group who genuinely wanted to be constructive and to reach conclusions, to listen to each other's point of view, and where necessary, reach compromise. And it was also down to the very hard work of the chairs and indeed your team, Tanya, who were, as far as I can make out, working all hours of the day and night to bring everything together. We couldn't agree on everything. And we'll know, I think we're probably going to get into some of those discussions a bit later on. But on most things where there was some debate, we decided it was best to surface those differences in the report. And I therefore hope that that is actually going to help the Commission decide on how it goes next, because I think, and it will help the Commission navigate the proposals through the negotiation process. So I hope that when it gets to the Parliament and the Council, the Commission will have heard quite a lot of the debates before. And I can also assure you that I'm sure Tanya has a drawers full of papers that were produced for the forum, there was a tendency, if you opened your mouth on a particular subject, to say, "Oh, could you write a paper on that subject for us, please?" So there is a lot. Somebody commented to me that they were surprised there wasn't more data. Well, a lot of the data is there. It's just it would have been a 300-page report rather than a 120-page report if we'd included it all. I'm personally particularly pleased that the focus was on investor participation, because the traditional focus has been on capital raising and on market infrastructure. And I think it's great that we've actually had a debate around how to engage individuals, how to help them feel confident and empowered in talking about money and being supported and advised in drawing up their financial plans, and help them understand actually that capital markets are not something frightening and technical. They're actually about helping them to have more secure futures. So actually, I think it's great that this report is not just and that we're not going to be just having the Commission talking about an economy that works for people, but I think this is also going to be a discussion going forward about how capital markets can work for people, which is great news. Thank you.
Thank you very much, Sheila, and thank you very much for the kind words. I could not thank you enough also for the ability and willingness to compromise, which was, I think, the leitmotif of the group, indeed, the ability to compromise and agree on the 17 recommendations, which in reality are probably more like 60 recommendations, if you look at all sub-recommendations, was quite remarkable. Now, Verena, Stephen was an observer in the HLF, so he was a very active observer, so he was not just observing, he was also expressing a view when he was asked by the members, particularly to comment on certain things. What do you think in terms of the positioning, let's say, of the focus of the group? Would you agree that the three big themes that have been identified, the three big clusters that the forum has sort of been split into, the cluster focusing on companies and SMEs and access to financing, the one on market infrastructures, integration of market infrastructure, and the retail investor participation. Do you agree with that split? And just now coming in the results from the poll, which suggests that actually 85% of you, those of you who are listening to today's panel, agree that the HLF, and the compliments go, I think, to in particular Sheila and Verena for the work that Stephen has done. So 85% of the audience considers that the HLF has either addressed all of the key issues or at least most of the key issues. So with that, I think we have about 15% that some of the key topics have not been addressed. So what do you think those 15% are? Could it be consolidated tape?
Thank you, Tanya, and good morning to everyone. I think, first of all, the high-level forum has clearly done an extraordinary job. And I think, Tanya, you mentioned, I think what is very important is that it is looked at the issue of a capital markets union really from all different perspectives. And I think that is a real important factor also in the success of this. And I want to maybe just come back to a few things that others have already said and further confirm the alignment of stars here that we have. Because for me, we in Europe have struggled for a long time to make our capital markets work as a genuine single market. And I think recent developments, and many of the previous speakers have pointed to them, have further emphasized the importance of now giving that another push. And I think one is obviously with the UK, the biggest national capital market on which much of the EU economy relies, now leaving the bloc. That has clearly become a key factor to try to strengthen and ensure that we have an EU 27 capital market that can stand up and can fulfill the needs of the EU economy. Others have already mentioned also, in light of COVID-19 and the deep economic crisis, it is now even more urgent to bring about an EU capital market in order to speed up the EU recovery. Europe is, as Kevin said, traditionally more reliant on the banking system. And to be fair, I think Dr. Cookie said that as well, with the better capitalization of the global financial crisis, I think the banking system has shown that it can step up. At the same time, it is important that there is sufficient credit in the economy to recover from the crisis, and a better balance of debt and equity finance. And I think, again, in this area, the CMU project is extremely important. And then finally, and by no means least, and again, Danuta Hubner and Natasha referred to this, the positioning of the EU in the wider global world. The economic efforts are clearly important, and we need a sizable market and a further integrated market to also compete on the global scale with other major financial centers. So from all those perspectives, I fully agree, and I don't think I've said very much new here. I think we all agree that the Capital Markets project is a major one. It was started quite some time ago. It's not something you can create overnight, but it is also clear that it needs to be giving another push. And I think the high-level forum work has been extremely helpful. And as others have said, having the report being so focused on also practical implementation measures, I think is very important. And it's now over to you, Tanya, and to the Commission in general to take this forward. It's an ambitious action plan, and I look forward to working with you, and ESMA clearly looks forward to support wherever we can to making this strategic project a real success. I think Sheila already mentioned the fact that the focus on the investor participation side, I think, is one of the key important areas in this report. And from that perspective, I would say that we are very supportive of that. What you need is investors coming into the market. At the same time, I think we should also say that the whole aspect of how does distribution to the retail investor work still deserves further analysis. We're supportive of some of the targeted amendments to MiFID II and PRIPS that were proposed to improve disclosure and fairness. And I think we should take collectively an effort also to look further at the role of inducements for the adequacy of advice. So I think that is one very important aspect. There are other aspects in the overall large number of recommendations that we are very supportive of, and are happy to go into more details on that later on, particularly, as Natasha said, on the European Single Access platform for financial information and non-financial information on EU corporates. We need a single place to have that information available for investors, free and in a clearly comparable way. And also from the perspective of ESMA, clearly the proposals for further strengthening supervisory convergence are extremely important. Another area where I agree with Natasha, where I think we need to be careful, is in the SME access to listing point. I think we all agreed it's extremely important to have rules that work, that are not too complex and burdensome for SMEs. At the same time, we also need to make sure that we properly think about the investor protection concerns in this area. And so some proposals, such as the transitional period after the IPO, on research unbundling, on dual class shares and lower free float requirements, I think we need to be careful not to lose sight of the investor protection aspects that are important to ensure that investors have trust in these markets and invest in these type of companies that are so essential for the European market and economic recovery and job creation. Thank you.
Thank you very much, Verena. We actually have a question that I might actually throw back at you and maybe at Sheila on retail. So we've got a question from Volker de Witte, PhD researcher in EU securities law from the European University Institute. So he is wondering what your opinion would be, whether or not all of the recommendations in the report, so I guess taken cumulatively, in relation to retail investors are sufficient to encourage participation of retail investors in the securities market. And of course, Verena, you've just mentioned the notion of trust. Creating trust and confidence of retail investors that they can invest in a way that would be fair, I think is very important to retail investors. So what would be your response to Mr. De Witte?
So for me, indeed, as you say, the building of the trust is essential. So as I said, for that, I think investors need to be sure that they get the information that they need to make their proper investment choices, that they get advice which is unbiased and clearly has only their best interest in mind. I think there's also another aspect which I think the report is good in pointing to, which is the link of having investors actually engaging in the market through enhancing literacy, enhancing awareness of capital markets more generally. And that, to my mind, is so closely linked to the pension system and the fact that investors actually are being brought into being exposed to capital markets in a way, but also to ensure that the capital that is there, which is currently sitting on bank accounts which earn negative interest rates, is actually brought to bear for the European economy and can help to raise funds through the capital markets. So I think there's a link of different areas with pension system reform, with proper transparency and availability of information, with the importance of having the right distribution and advice regime that ensures that investors are at the core and that we eliminate the conflicts of interests that can be there. All of that, I think, ultimately will help to build trust of investors. It's not an easy task, and trust is difficult to build and easy to be lost. And we see, whenever we see polls of investors, we see that still the financial markets rank pretty lowly in customers' appreciation of trust. But I think it is something which we need to collectively work on as the market participants, the regulators and the legislators to ensure this improves.
Sheila, back to you. What is the take of asset managers? So are we getting there? You know, we have been discussing the issue of retail investor participation for quite a while now. And every time there's something that seems to be missing. The forum put forward quite a few very good recommendations, as Verena was also commenting on, including in the area of pension, in the area of disclosures, distribution, etc., etc. There were some heated discussions on some of those topics. So what your take? Would it be enough? And how long would it take us to build the trust, to build the confidence of those retail investors to actually start getting into capital markets, start acquiring those instruments that would be adequate for those retail investors? Because, of course, not all instruments are adequate. What would be your take?
Well, I mean, we've got a long way to go. But it's good that we're thinking about it. And I think it's very good that we're taking a step back. Up till now, we've focused on disclosure and transparency and information to be provided to investors. That's all very important. But actually, you need to get investors engaged in the first place. People don't wake up in the morning and think, oh, I'll wonder, I think I might go onto a comparison website and buy a Schroders fund today. That's not how it works. So we've actually got a quite deeply ingrained cultural issue in Europe, I think. We don't talk about money. And I think we need to encourage people, rather than talking about giving access to retail investors to financial products, we actually need to change the way we think about it. And we need to be thinking in terms of how can we help investors find solutions to issues that they find in their lives. How can we help them and support them in achieving those aspirations? And once we start thinking and using language like that, that becomes much more interesting for them to engage in. So we do need to it's that investor consumer engagement that's of concern. I do entirely take Verena's point about trust. I also am a strong proponent of support and advice, and that support and advice needs to be fair. At the same time, some people who know me well and know that I dealt with the RDR when I was at the FSA, I am actually not necessarily a believer in inducement ban across Europe, because I think the structures in Europe are very different. But I think it's a good outcome from the report that I think there are potentially unintended consequences, and that we simply don't know enough about distribution markets in Europe. So I think it is great going forwards that we're beginning to focus on that and beginning to think about how those markets work. But we need to do it on the basis of evidence and a full understanding of what's going on out there.
Thank you very much, Sheila. I see, Danuta, you want to react
on this. I want to react because I thank you, all those colleagues who basically said that it is a young project, a relatively young project, but we are not starting from scratch. And I remember in 2014-15, our first conversation with Jonathan Hill when the big plan was prepared by the Commission. And exactly one of the issues was this, just to encourage, to build a culture that would attract the retail savers, retail investors to join the whole project. And we saw it as a big challenge. But I frankly think that, and if I listen to what Sheila was saying, that that's exactly one of those areas where we actually failed. So if I on the one hand think that a lot has been done, because if you look at the list of legislative acts, a lot of important things have been done on the basis of the initiative of the Commission, but on this, I think we didn't make it. So now I think it's the fact that the retail investors are one of the major addressees, in this report is, I think, extremely important. But again, without banks, probably we will not do it. And how, in general, we can do it. I don't know exactly this part of the report, but I hope that there are some ideas of how to really make it. What is worrying for me, however, and maybe I would like to hear your reaction, is that we don't talk much about the barriers which are outside capital market, because we still have this risk of fragmented capital markets if we don't address the strengths of central supervision of the European supervisors, if we don't address the remaining issue of the European standards, which are still needed probably here and they are good in reducing fragmentation. And if we don't address also we hear it all the time from Elke Koenig, and we used to hear it for years from Danielle Nouy. There's just those national regulations, national options and discretions, and I think here of solvency, but also taxation and many other things. So if we don't do it, those barriers will stay, and they will make the cross-border capital movement practically impossible. So we would like to see, as legislators, to see your support, your involvement, your saying how to get rid of all those barriers within capital market, outside capital market, that can help us to not to get more into the fragmentation exercise as we have been trying for years after 2008 to do with banks, and now I'm worrying again that we might lose it. So this issue, I would also like to make you sort of be aware that we are, as legislators, thinking that it's going to be difficult to convince the retail investors, and also to convince member states, especially, to sort of strengthen the ESMA and others, and also to have a better addressing better the national options. Thank you.
Thank you very much, Danuta. Allow me to ask a question to Kevin. You mentioned banks and the role of banks, and then you mentioned Daniel in this respect, and then national discretion. So, Kevin, what is your take? What are the real barriers that you are facing today? And is the issue of national discretion is really a big issue for you? And then something perhaps not immediately related to that, but I mean, as a bank, you should be more focused on that. And yet, I think you have mentioned equity in your introductory remarks, which makes me wonder, why equity? Why, isn't equity expensive? That's what we hear a lot. Equity is extremely expensive, and with all this monetary support and all of this additional liquidity that is plugged into markets in order to remedy the liquidity shortages, I think that became even cheaper than it was several months ago. So why do we need equity in your view, and what are the barriers? Back to the first question, what are the barriers that you're facing?
Okay, well, look, in terms of your first question, I think whether people like it or not, centralized supervision, regulation, call it what you will, is very important. You see this in other places where there are very deep and extensive capital markets, both equity capital markets and debt capital markets, I appreciate the challenges across Europe, but at the end of the day, it's actually in every EU member's own interests at a national level for there to be deeper, more liquid, cheaper capital markets for Europe, for European corporates, for European pension funds, for European investors, for European individuals. So it really doesn't work against an EU member's own interests to sort of oppose some of the the critical central supervision that is needed, and I appreciate it's a tough one politically and for other reasons, but it is needed. But on the equity versus debt, any company needs to have a robust balance sheet, and that usually means a mix of both equity and debt. Equity is riskier. In that usually equity holders only get their money back after everyone else has been paid, including bank lenders and bondholders. So that's why equity, sort of somewhat simplistically, is more expensive. It's more expensive because it's riskier, but it also, if it all works, it gives the holder of equity a higher return because they're taking more risk. So it's not really a question of equity or debt. The two complement each other, much as Capital Markets Union, I think, complements banking union across the EU. So, but the reality is that the equity pool, in the EU in terms of its accessibility, particularly to corporates, big corporates and small and medium-sized enterprises, is not as large or as deep or as liquid as it is in other places. And it's interesting, over the last few months in the crisis, we don't just lend money, we also help clients raise equity and raise debt in the capital market through bonds. We've seen relatively a lot more equity issuance in the UK, in the States, than we have across Europe, for all sorts of reasons. But one of the reasons is exactly what we're talking about, Capital Markets Union and its development and its progress. So it's not an either or in terms of equity or debt. They both have critical roles to play. And in terms of Capital Markets Union, it's about using that to make sure that there's a better balance for us all in Europe in terms of, access to equity as part of any institution, any company as financing options.
Thank you very much, Kevin. I think we all agree that we need diversified sources of funding with debt and equity. Natasha, I understand you wanted to react to Danuta's point on national discretions.
Thank you, Tanya. I think it's a very interesting conversation. And supervision is always a contentious issue, right? They always have the proponents of further integration, and you have those that oppose it, and it's always very difficult to find that balance. I see that in the high-level forum. No excuse. They also had the same debate, obviously. But I think it's important. The AMF has very long advocated for further European supervision. We have always been convinced that it would be a plus for the European Union and for capital markets, that it would simplify having a single guidance for the market. But we also have to acknowledge that hasn't been supported, and that there is no consensus for bold proposals. So maybe crisis can change dynamics, but the high-level forum leaves us a little bit dubitative, unfortunately. But there are still steps that we can make, and I first wanted to highlight the fantastic work that ESMA has done in the recent times. So during the crisis, ESMA has really stepped up its coordination efforts. It has helped us come together more often, identify issues early on, and then provide guidance to the market. So we had EU-wide guidance very quickly during the crisis on issues like business continuity, issuer disclosure, financial accounts, you name it. There have been many, many occasions where ESMA has stepped up and helped us have this guidance, and so national regulators did not have to do their own sort of slightly different communications. At the same time, we also had to observe, unfortunately, that I think Dr. Cookie's touched upon this. It is always slower, the decision-making process at the European level, than it is at the national level. We certainly need to work on that. And also, it also showed this crisis that there are still many areas where the responsibility lies with the national regulator. And so in a crisis situation, the first person in the front line is the national regulator. So that's something we probably need to think about. I'm not going to comment on the details of the report and the granular proposals, but I wanted to touch upon one concern we had with the way it's framed today. Because of these tensions with the pros and cons of further European supervision, the outcome of the proposal is unbalanced. We need to think about supervision as a whole. We can't push for this multiplication of exercises for promoting more convergence without having other elements building up. We are concerned that we might end up with this exercise having very time-consuming, burdensome exercises that will distract national regulators from urgent duties at a time where all of us have very scarce resources and huge challenges. So we need to find the right balance and think of the supervision as a whole. The governance, supervisory powers, crisis tools, convergence. If you unbalance and you do too much convergence, you're just adding complexities, and we're maybe not going to get there. The other point that I think is very positive in what was proposed is the suggestion to move to more regulation. We've worked a lot, and ESMA has been critical in this process, moving towards a more single rule book. I think we've made huge progress there. But if we move to regulation and you don't have national options, you will also remove from the outset, at the very top of the legislation, that ability for divergence. I just wanted to comment on that because that's a topic very dear to our heart here in France.
All right. Many thanks, Natasha. I think that there was also an agreement among the HLF members that a single rule book would actually be a good starting point. So I think that it was actually among the points where the forum members all agreed on. I think you've made Verena very happy because you've done a lot of praise for ESMA, which always is remarkable when it comes from a national regulator. So I think that was probably very well received, speaking for Verena here. You've also criticized the HLF recommendation in the sense that you found it slightly unbalanced, well, maybe not slightly, but unbalanced, which I think Sheila and myself, we should be thinking of. Now, Verena, because this is supervision, because this is centralized supervision, so maybe a question to you. ESMA, the role of ESMA has been changing over the last months. I mean, no one, can deny the fact that you've become an extremely important member of the supervisory architecture. However, what we've seen and we continue to see is that there is still a lot of reluctance on the part of the member states to move towards more centralized supervision. not even, when we had difficult discussions in the last mandate on Brexit and implications from Brexit, you make an even stronger case for a centralized supervisor. So what do you think, where can we land? Do you think we need really a true single pan-European supervisor, or we can do with a mix of convergence powers and perhaps enhanced, beefed up governance, or could we risk getting into a situation of, and I'm quoting here, Natasha, too much convergence? Thank you.
Thank you, Tanya. It's a difficult topic because, as everyone has said, it's a topic where you can have very different views. I think maybe as a starting point, I would like to go back to something Kevin said, and also Dr. Cookies, I think, emphasized, that the fact that we have still very uneven supervisory practices and detailed national rules is clearly a major barrier to having proper cross-border investments and a genuine capital markets union. So I think we need to recognize that. I think we also should be clear that while there's clearly a connection between banking union and capital markets union, securities markets are by their nature more diverse and less homogeneous than the banking sector. And I think that also means it's more difficult to think of it as has been thought of in the banking side to, the one central supervision is the solution. So I think in the securities market side, it's clearly a mixed model now, and to my mind, at least personally, I believe it's likely to remain a mixed model, but clearly progress needs to be done, and it needs to be done progressively, in my view. So some progress has been made, and I think we should be clear about that. ESMA already is the European supervisor for a number of entities, credit rating agencies and trade repositories, first and foremost, and that is expanding into other areas, and the ESA review has clearly taken a further step forward on that when it comes to data service providers and benchmarks. On top of that, there's importantly EMIR 2.2 with the powers for third country CCPs, which were collectively between Commission, ESMA, and the co-legislator in the process of implementing. So I think all of that is extremely important. Natasha rightly pointed to the fact that, we really tried in the current crisis to step up to give the common European views on important topics, to ensure that when national supervisors interact with their individual entities at home, there is a consistent and common line to do that. And I think that we will clearly continue. And for that, I think convergence powers are clearly important. And we have stepped up our convergence activities, but we also believe that there are still areas where the convergence powers could be further strengthened to reduce arbitrage risks, for example, in the ability to access information and for small convergence supervisory outcomes. At the same time, and it is a political debate, and I'm, in a way, ESMA is here at the receiving end, there are clearly merits to think about more centralized supervision in some areas where you have genuine cross-border activity and market concentration, and where there is really a genuine European infrastructure that could be looked at from a European perspective. I think the other point from my mind, which is important, is the third country firms and market player access to the European Union. And clearly that's becoming more important with Brexit. I think it's important that the EU 27 has a single entry point for these type of firms, and that these type of firms are supervised on a level playing field with the EU entities. And finally, and by no means least, I also fully support Natasha's point on the importance of moving away from national discretions, having more regulations, and making sure that we have a common interpretation. And that is both, by the way, on financial services legislation, but there are other aspects outside of financial services legislation which are also extremely important in that context, be it taxation, be it insolvency law and other things, which obviously are not directly in our remit.
Thank you very much, Verena. Supervision is undeniably a very complicated and very political and quickly very sensitive topic, for which we do need a lot of political momentum if a true reform can be or should, if we want to push through a really ambitious reform. Now, Danuta, and this is also building on the responses that we have got to our poll 3 question, when we asked specifically our audience, how did they assess the extent of political momentum at the moment? And I understand that only 17% of the audience believes that the member states and the parliament are ready to go with the proposed reforms and recommendations as suggested by the HLF. 65% think that they would be ready to do that to some extent only, and 17%, so the exactly same amount of those who thought that there is no political momentum, were saying that basically there is political momentum, apologies, that there will be actually a lack of political will to push through ambitious reforms, and there will be a lot of watering down on the way. As one of the legislators, you have been dealing with the CMU proposals in the last mandate. You know how difficult it was on some of those cases to put through something that would require really unanimity or wide consensus among member states. What has changed now? Do you think it will really be different this time? If you could share with us the Parliament's take, of course you cannot speak for the member states, but maybe also your feeling.
Yeah, I can actually speak only for myself because, even within political groups, and we have now more than around 65% of the colleagues in the Parliament are new faces. You walk, now you don't walk, but before the COVID, you walk the corridors and you don't recognize anybody. So we have not yet tested ourselves strong enough. Now, during the COVID, where we are very active and we are voting, it's just a nightmare, but we are doing all those things through the systems, teleconferencing, and it's easier probably people are more open to support, there are less, I think, fighting, but I don't know how long it will last. But what I can tell you, we are currently also one of the colleagues from my political group from EPP is working now on the report on the CMU. We did not yet have, I think, a broad discussion. Sheila, somebody should come. I don't know if Thomas Wieser or yourself or whoever. We should just start discussing, I think, the issues, because the report is very concrete and it's just saying what we have to do to now. It's just not philosophical, there's not much discussion for the systemic, I think, solutions, but just very, very concrete, very pragmatic, which is good. But there is, of course, the tasks for all of us, for regulators and supervisors and businesses there, and also for the legislators. As you know, we depend on the Commission. So if I can just put the ball into the yard of Tanya, we are awaiting the initiatives. But I think there is awareness of the seriousness of the situation. There is awareness that we cannot do everything just with European budget, no matter how much we will raise the own resources and how much will be borrowed from the markets. We also need market-based financing for the massive investment needs we will have, because we know where we are currently. So I think there is awareness of the challenge. I think also that the major fight will be between how much move to Europe, and I thank very much Kevin for all his remarks, and how much will be left to the member states to, again, increasing the number of national options. So this will be certainly a line to fight. I think there will be huge support for all the priorities you mentioned, and especially I think retail investment. But I also think that the barriers, also those which do not, some of you were mentioning that they are not within our remit now to discuss or to within capital market, but they are influencing also the cross-border capital movement. So I think this will be also an issue which is painful for many of us. There will be, of course, also this general measure taxonomy. I mean, is this commitment to climate-friendly policy regarding capital market, is it there? Is the digitalization there? We think we should use also those long-term objectives of Europe as drivers for growth. They should be also reflected in the solutions that the Commission will propose for individual issue on the capital market. And I also hope that this question of barriers will be more visible. I went very quickly through those 100 pages of the detailed things, but I think that those barriers are extremely important. And the last issue which I would like to mention, we might be divided in the Parliament, but which I think is also very, very important and will come in our commitments, is that this capital market union is not only about the internal integration, but also about internationally competitive capital market. And that's why, for some of us at least, the competitiveness and the avoiding like smart implementation of Basel 3 or 4, whatever you like to say, or also reducing competitive disadvantage through respecting EU specificities on some issues, or so everything that can make this market also competitive globally, internationally. We need it, I think, now in this world that is coming out from the COVID. So I think this will be also a very important issue. And probably I think on what will come first, I don't know how the Commission will be deciding, but there must be a logic, and this roadmap, as somebody said, should be a very short roadmap. So we have to do it as soon as possible. We cannot just spend next 10 years on sort of reflecting what is more important or where we have agreement, but a lot of work will be required, which you cannot do through teleconferencing. Difficult issues are impossible to solve if you cannot come physically to a meeting. But I can make commitments, certainly. And I think on behalf of most of my colleagues, there is a commitment to building capital market union. This has been for years with us. And I think the environment will make us also accountable and responsible, I hope. Thank you.
Thank you very much, Danuta. I think we are gradually approaching the end of our panel. Maybe a few words to summarize the conclusion so that we have good takeaways and leave audience with good takeaways. I take that the ball is now in the Commission's court, and probably soon it will be in the co-legislators' court. Here I would like to quote Thomas Wiese, who was an excellent chair, and I think Sheila can vouch to that. He was a great chair of the HLF. So what he used to say, and keeps on saying that, and I think he cannot say it enough, is the legislators or the member states agree on Sunday, and then on Monday, when technical discussions start, all of a sudden they no longer agree. So I just hope that the political momentum and overall support to the CMU would translate into actual support to agree in the spirit of consensus, in the spirit of the bigger objective for the Union, driven by a great deal of necessity, both for our own businesses, for our citizens, for the sovereignty of our economy, but also acknowledging the fact that without deep markets, we will never be attractive to third country investors. We will never build Europe as an important jurisdiction, let's say, as a jurisdiction with a say in multinational fora. And of course, other important objectives, such as the Green Deal objective, the importance to ensure that there is sufficient funding for the green transition, sufficient funding for digital transition, and the importance to reinstate and enhance the role of the euro and the use of the euro, of course, cannot be achieved without the CMU. And I think this is something that we all share, and all of the panels today share, and that was extremely helpful to reiterate it. Now, of course, we might all disagree as to what the exact actions should be that need to be taken forward to bring us to that coveted objective. But I think no matter what whether there are disagreements on details or not, I think one thing that we need to keep in mind and continue our work with this idea in mind is that we all share the ultimate objective of making sure that we end up with integrated markets, and we need to remove some of the obstacles that have been there perhaps for too long. And that requires some political courage. So with this, I would like to thank you all for a very good exchange. I would like to thank the audience for good questions, and I would like to wish you a very nice day. Thank you.